Okay, so the action is really a bit frustrating, to be frank, because in light of what has been going on with the current number, of course, it's a very good number, so we shouldn't have this kind of poor performance with the dollar against the yen. But there's something that we need to take into consideration too, and that is that we're at the end of the week. All right, and usually if you know that you have a trend at the end of the week, all right, we had very strong numbers. What some traders would consider to do, of course, we were somewhere here today, so you simply buy the market and you go out after just 20 points on good size. Okay, if you're doing this, we'll take a look at the 5 and 15 minutes, you'll be making some good money and you're out before the weekend. And at the same time, you would of course impact the market by showing that because there has been some kind of selling going on, the price will drop and you will find that other traders are really moving out of the market. Frustrating to say the least, but this is actually just because we are in the position and the market doesn't want us to make money, most probably. Anyway, we have to incorporate in our cycle count the higher degree count. So we know this is cyclic, yes, and we are contained. We already did speak about that yesterday, I believe, that we are contained. We have a central axis at 78.6%. We are still contained at that central axis. We're looking at the 1 hour chart here. Okay, so now this is that correction, the cyclic correction. Of course, there's a 2A, there's a 2B. That 2C can do an A and a B and a C and a D and an E. We are just at that E, at the bottom of that market E. Why? I have no idea. Why doesn't the market go up right out? There seems to be some kind of profit taking. We're still into that cycle consolidation. Okay, so we were expecting that this is a degree 1. There was a 1 here and there was an A, B, C into a 2, and we're going out. This could still be 2C. That's why we have these red green labels. We have a 1 and an A and a B and a C. We expect this to work out. We are at that. We have to remember we have been having these two bouncing levels since 2 days ago. That red one, we said we were going to bounce at 113.57. we did bounce, but we're back to 115.37. The next bounce comes in here. If we're going to have an Elliott structure, comes in at 113.45. It is actually the same assessment technically that we were doing a while back with oil. You're looking at this point, all right, and this blue point, this blue top here. Okay, so we think the bounce is still coming in, all right. It's just the market is flushing out weekends, and maybe it is just because this is the end of the week. So okay, so let's take a look at the commentary. Just bear with us another second. All right, so everything is fantastic and positive. Okay, just bear with us another second. All right, so the dollar is up. I've just checked all other charts. The dollar is up against the dollar, against the euro. It's up against sterling. It's maybe yen is strong today for some other reason that doesn't really have anything to do with NFP itself, with the NFP numbers. Our bias is still the same. We're still bullish. Okay, we can all see the count right here before us. We just talked about it so many times. We now have studied it by heart, cycle wise and label wise and everything. This is the bottom of 2C. Okay, so even so, we're just bouncing. We took a look at the 15-minute chart. That's the 15-minute chart. Was bouncing at these very small internals. We're contained by these very small internals. So if we're long, we hold on for a breakout. I believe we are long at 113.7 all the way down to 113.3 earlier and 113.4. About 2 days back, we were going to long at 113.56 and 113.6. If we're holding these longs, we are good. We are bouncing at that yellow top of level 1 here. I know it is disappointing. We would have expected the market to move much higher and much faster. But remember, this is a 5 swing structure. We can actually correct all the way down to 113.3 and 113.25 and still be bullish. Okay, so there are some cash flows always associated with end of week trading, and end of week trading, people maybe they had some kind of higher levels, they have reduced them. All right, someone could have taken profits on longs, was long at lower levels, something institutional longs as of say 112.9 and these kind of levels, and doesn't want to carry the longs across the week. They would close at these levels, they're still in profit. The market is still a go. All that is just happening is we're having another leg E into that 3C, or leg 2 into wave 3, and that C could even develop into an asymmetric triangle. We don't have really to draw the lines, but you can all see that we are probably going into this, or an ascending triangle. So we're still consolidating, but we'd hold the position. Of course, going into the weekend, we're also always advised to reduce size. Okay, so if we are heavily loaded, but this is a primary swing position, so I would really consider not to reduce size. But you have to be comfortable with what you're holding. If you wanted to reduce size towards the end of the day, I believe we're going to be seeing 114.3. These kind of markets, if they are flashing out weekends, consider this. Towards the very end of the trading day, you'll find that the market has moved very fast, very quickly in the last 2-3 hours. So we are here at 113.67 now. Don't be surprised, really, that by the end of the day, you find that you're at 114.5 and have broken out of that top of wave 2B, out of the top of one altogether. This here is 114.5. You could do 114.5, 114.7. and then towards the end of the day get back to correct at 114.5. At that point, we should be seeing some kind of an inverted head and shoulder structure, multiple head and shoulder structure. Okay, so the market's still a go, and we would consider to hold. For some reason, we're biased, and we're biased, of course, meaning that we have a strong opinion that it is bullish. All the fundamentals are pointing that this is going to be going up suddenly, maybe towards the end of the day. That's what I personally believe. It will be going up suddenly. Technically, we are bouncing at that internal level 1 here. I think that's my personal opinion. By the end of the day, we'll be seeing, if not 114.3, we'll be seeing 114.7 and then correcting back to the neckline here at 114.3. Okay, so it's everyone in the risk comfort, of course. If you're already long, we would consider to hold to our longs in accordance with this projection. Stops would just be even going into the weekend at 112.9. We're just below all of these cycle levels. If you're holding a big size long, you can have multiple stops, part of your stops maybe for 1/3 of your size or 1/2 of your size at 112.9. The remainder, of course, much lower at 112.5 and 112.